Welcome to EWA's FIN LYT podcast. EWA is a fee-only RIA based out of Pittsburgh, Pennsylvania. We hope all listeners of this podcast will benefit as we deep dive into complex financial topics that we will make simplified for you. And we hope that this really serves as a catalyst so that you can make the best financial planning decisions for your family and also save time. Welcome, everyone, to this week's FIN LYT by EWA podcast. I'm joined here by Ben Ruttenberg, our number one sports person on the EWA team. So excited to talk about the NIL, how the college athletic landscape has changed. And most of our clients have big, some big ties into, a lot of our clients like college athletics, follow college athletics. Some have, kids that have played college, they themselves played. And so it's just an interesting topic. So we want to address this head on because a lot of our clients are going to have some people that affected or will be impacted by this. And also in the future, I think there's going to be a lot of financial literacy and education that needs to occur. So students don't get themselves into big, tax trouble or financial or money temperature troubles as we refer to. So excited to dig into this and see where it goes. But Ben, I know you naturally know a lot about this stuff. Maybe because of the Ohio State loss, you've had extra time on your hands to look at other teams. I don't know, but anyway, so tell us about NIL, Ben.
Well, first of all, Matt, thanks for having me. I know you had put a 5 to 10 minute kind of stopgap for me to talk about sports and NIL. We are going to get into finances in this podcast, but I think it's important for the viewer to understand what NIL is, why it exists, and the changes that have happened in college athletics over the last really 2 years. NIL was adopted in July of 2021, and it stands for name, image, and likeness. And so this is essentially a policy that the NCAA adopted that allows student athletes the opportunity to benefit from their name, image, and likeness without having it jeopardize any of their NCAA eligibility. So essentially, players can earn profit from brand deals, sponsorships, they host their own camps, guest appearances, autograph signings, all of these things that players can now utilize and leverage to earn money. They can do this now without having it impact their eligibility. They can still play in whatever sport they're playing. And so why did this come into play? Why did this happen in 2021? Why did this shift happen? Well, really, the NCAA has been it's turned into a $1 billion business between March Madness and TV contracts and the amount of money that is being wagered on these games. These college athletics and NCAA is really becoming a money-making machine. And we're not going to get into personal opinions too much on this podcast, but it was getting to a point where players were on scholarship. They were receiving funds from that for tuition, room and board, meals, things like that, but they were not profiting at the level in which the NCAA and all these companies were making money.
Putting their lives at risk in some sports, some cases with concussions, or not putting their lives at risk, but putting their health well-being long-term at risk.
Exactly. And just a couple stories here that I think illustrate this point. One of them being from a 30 for 30 documentary about the Fab Five, which is the Michigan basketball team in the early 90s that started 5 freshmen. One of those freshmen was Chris Webber, who turned into a great NBA player and now is a commentator for NBA games. But when he was playing, he told this story about how he would be walking down the street at Michigan and he'd look into a bookstore and he'd see his jersey being sold. Again, number 4, Michigan basketball, no name on the back, but it's clearly Chris Webber. It's being sold for $100 a jersey, $150 a jersey, whatever the number is. And meanwhile, Chris is struggling to find money to put gas in his car and drive to and from class. So who's pocketing that $100, $150? It's clearly the school. It's clearly the NCAA. And Chris isn't able to make money from his jersey being sold, his image, his likeness. So that would be an example of this policy changing where players can now receive a cut of that compensation if the university if the NCAA wants to market these players as athletes, which they are.
I played golf with Chris Webber a couple years ago. Really nice guy.
Really nice guy. Well, there you go. Another
His basketball game is better than his golf game. His golf game was good, but as a tall guy, I know personally it's yeah, he swing looked good though. I know he's working at his game, but basketball player, unbelievable.
That's awesome. Well, he was a huge proponent of this was in the early 90s, and this didn't come into play until the 2020s, but that started these conversations, and those 5 players really were catalysts for a lot of the conversations we're having today. Another example would be just NCAA football and basketball games. So these stopped happening in the mid 2010s because Electronic Arts and the video game developers could not label players in the game, because then they would have to pay them, because then that would then ruin their eligibility.
And the players weren't allowed to receive
players were not allowed to receive
payments.
funds. But if you bought an NCAA football game in the mid 2010s, I'm just using an example. Again, I'm an Ohio State guy. I'm going to use 2 Michigan players as an example. But Denard Robinson.
At least you're acknowledging greatness, Ben. You're acknowledging greatness of Michigan. That's good.
Denard Robinson, the old Michigan quarterback, was on the cover of NCAA Football 14. And so if you bought that game and you turned it on and you said, I'm going to play as Michigan, their quarterback is number 16. He's 6'2". He's 200 pounds. He's got long hair. He looks exactly like Denard Robinson, but his name in the game is QB number 16, because you can't actually say that's Denard Robinson without acknowledging them as athletes and therefore giving them a cut. So again, video games are making money off the kids. The NCAA is making money off the kids. The TV contracts are making money off the kids. It's, again, we're not going to get into personal opinions, but with these changes now, again, players aren't being paid, but they're able to earn money from their name, image, and likeness, which I think is great for the future of the sport.
Yeah, absolutely. And I think it's also great to keep talent inside of college, because a lot of people prefer college sport athletics over, professional athletic, like NFL, NBA as examples. And this will enable the college to still get the best talent, potentially, because some of the talent will skip in college just because of these issues and not being able to get paid and not, et cetera, et cetera. So, personal question for you, Ben.
Yeah.
With Ohio State, I'm not rubbing it. I'm just asking because I'm curious. Ohio State's always has like a perfect record until the big game, and then they, at the big house, I guess. So with the Ohio State, with the recent coach, we're not going to name names, being under 500 against top 5 teams, it just, you can Google that. How much NIL money do you think Ohio State needs to get the correct team in place to win these top 5 games?
Wow. Really, really putting me on the spot.
Because Matt Rule, the Nebraska coach, says it cost $1 million just to get a quarterback at this point. And he's right. I mean, that's with his NIL stuff. So there's good stuff about the athletes, but there's definitely some paradoxes, because it's now you essentially have to buy the top talent.
Yeah, and to your point, I'll get back to your question in a second, but buying top talent doesn't necessarily equate to wins. There's a lot more in building a team than just going out and like signing free agents, so to speak, in the transfer portal and with NIL. It is still about building a culture and developing a team, and I think
it comes down to the top 5 games. You got to win the top 5 games, like Michigan is an example of.
Well, it has been a rough couple of years from that standpoint, but it's great to have the rivalry back, because as you may know, Ohio State absolutely destroyed Michigan for about 15 years. So it's good to have Michigan back in the rivalry.
All right. I'm enough busting here. Let's get back to the regular scheduled program. But you held your cool there way too long, so I was wondering what was going on there, Ben. But all right. So thanks for that. So the examples you gave here, so they can do guest appearances, they can do autograph signings, which, some examples of that would be like if you watch the Johnny Manziel, I don't know if I pronounced the name right, on Netflix. Yeah. He was doing that like illegally, and he made, I think it was like Texas A&M. Was it like $1 billion? Like they built a new stadium. He beat Alabama. I know it's the team, but like it was crazy how much money he made, not only for the NCAA but also for that university. And he missed out on all this. Now didn't miss out on all of it because he was doing it illegally. But now all the stuff he was doing in the documentary, he people can do now and get paid for it legally.
That's a great example because he would do these autograph signings and all of these appearances, and he would take cash because they wouldn't be able to track it. It's untraceable. So this would be a great podcast for 2013 Johnny Manziel to listen to because we're going to talk about how to manage NIL the right way. He had bags full of cash. There's probably ways to manage NIL the wrong way. But yeah, great example because that now, if Johnny were in Texas A&M in 2023, he could do all of this legally and report all this income and do it the right way, as opposed to the system in quotes that he was using back in 2013.
All right, so let's just say someone gets paid from NIL. Just give us like a basic rundown of what they need to do from like a financial tax management perspective.
Yeah, so NIL money, I would think of it like you are a business owner, and any money that is paid to you from NIL is considered 1099 income. So if you're an athlete, you get NIL, it is treated as if you are self-employed, and any money that you receive comes from a Form 1099. So if you earn more than $600 from that standpoint, you need to file a Schedule C to determine your taxable income. There are a couple tax considerations we want to be aware of with 1099 income. Because you are your own employer, you are responsible for paying the employee and employer portions of Social Security tax, of Medicare tax, as well as obviously any federal, state, and local tax that apply. So we're going to go through a more detailed breakdown of what that would look like with your NIL money. But more importantly, it is important to know that, hey, this is 1099 income. Taxes aren't being withheld. We need to be very proactive in what we're doing with this money. Just because someone has $1 million NIL deal, Matt, doesn't mean that they're netting $1 million and it's all good.
Yeah, the dangerous thing about that is people that aren't used to having money. I don't know about you. I've worked like a job that paid me, let's say like $10 an hour when I was in college. And it was like a necessity to get by. But that was W-2, and so the taxes and everything were getting taken care of. But like, I can't imagine for someone that doesn't have the financial, which isn't trained in school, like you get the money and now no one tells you like you have to pay tax on it. There's going to be a lot of stories I think that come out that people go into tax debt without managing this properly. So I mean, in general, regardless of the NIL, I mean, you're probably in general, you need to take 30 to 50% of that money, and depending on how big it is that year, and set it aside. It's going to go away to taxes no matter what. Mm-hmm. So that takes discipline because basically as a kid you get 100% of the money, you see it, you feel it, and once you see it and feel it, it's like you're kind of figuring out a way to spend it already, especially in college with your buddies. And but right away, I mean, we have clients that are $1 million income earners that are 1099 that struggle putting that 40 or 50. So imagine you're a kid in school and you just got paid 50 grand or $1 million or whatever it is. It's just the fact that you have to give part of that back right away is a struggle.
Yeah.
So,
and I don't know how that's communicated to the athletes when they receive the NIL funds. I don't know if they just get a 1099 and they think that's awesome. I'm netting this. I don't know how that's communicated their taxes, but we're going to run through the examples of taxes that you'd be subject to as 1099 income and make sure that people are doing the right thing. Yeah,
absolutely. So right off the bat, we recommend you should probably have 3 accounts that it goes right into so you don't feel it and see it, because your money temperature is a real thing. Just like if you like the room at 67 degrees, just like if it goes to 75, you're going to go adjust, or it goes down to 60, you're going to be freezing. Money feels the same way. So once you adjust that temperature, it's nearly impossible to adjust that. 3 accounts you should have. One, it should be a account that you're going to spend some money out of. The second should be what you're going to save. And the third's got to be taxes. And you can never see that, never feel it. So I would recommend right off the bat, if you got an NIL check, it should be direct deposited. It should be split between those 3 accounts right off the bat, or 40% into taxes, maybe 20% into spending, depending on how big, and the rest into savings. So you can really set yourself up well. Because this is earned income, so we'll talk about how you can fund you can set up your own 401k, Roth IRA, all that kind of stuff. So, okay, so NIL collectives. Before we get into some specific, what is this NIL collective subject you have here, Ben?
Yeah, so this is just a way that players are being paid. This is groups that are funded by alumni and supporters of a certain university. And they're the ones that can actually raise revenue and use funds to help create opportunities for these student athletes to help leverage their NIL in exchange for compensation. So these collective groups are forming. I mean, this is still very new. This is only a couple years in, but these groups are basically responsible for making sure that athletes are getting the funds and for collecting funds. So it's not just, hey, some local restaurant is paying the star wide receiver from their bank account. You know, they're essentially a middleman that helps organize some of these NIL payments and make sure that the athletes receive them correctly.
Gotcha. Okay, so let's go through some. And what is this thing you have here around the NIL income in multiple states jock tax? That looks funny to me, but what does that mean?
Yeah, this is probably more relevant for professional athletes than collegiate athletes, but it's something important to think about too. This is essentially any income tax that's levied against visitors to a state that earn money in that jurisdiction have to file a state tax return in that state. So let's say you're a college athlete in Ohio and you get the majority of your NIL money in the state of Ohio, but you travel to Pennsylvania for appearances, or you travel to Florida for camps, or you travel to New York for an appearance fee. You may be subject to state income tax in those states that you earn NIL money in, even though it is not your state of residence. So this is known as the jock tax because professional athletes are subject to it. If you are a professional athlete in the city of Pittsburgh, but you travel all over the country for your games, you're essentially earning income in other states as well. So there's a portion of your check that goes to this. And so if you're earning NIL, it's something to think about. Hey, what states are you actually earning income in? Because you may need to file a state tax return in that state.
Gotcha. Okay, that makes complete sense. All right, so let's talk about some specific examples. So let's talk about who made the most NIL money.
LeBron James Jr.
More than Shedeur Sanders.
Correct. Yeah, I think Bronny was in the $6 million range. Olivia Dunn, who is a gymnast at LSU, was very close. And,
$6 million, a gymnast?
Yeah, it was like 4 or 5, I think. And then Shedeur Sanders was up there. Quinn Ewers, the quarterback at Texas, was up there.
What did Shedeur make? Do you know?
Don't know. I think it was in the $3 to $4 million range. Travis Henry, his teammate. Was
so I went to a Colorado game before my hip surgery. They were playing Oregon State. And just the bling alone that those guys were wearing. I mean, I would assume he's in the millions. Shedeur is. And then apparently his parking tickets he gets for parking his Rolls Royce. He needs to be making millions to take care of those as well. So, anyways, that was a crazy environment. I mean, the tickets there were insane. It's like literally you're sitting on like a concrete. Anyways, they needed like a Johnny Manziel update
to
that stadium.
Upgrade.
Yeah, it was like a fun, cool like people watching environment.
Yeah.
Oregon State. I think they lost by 1 touchdown. Oregon State scored. They did something stupid before the first halftime. They scored a touchdown. Like they turned the ball over and then they scored with 15 seconds left in the first half. So
I'm excited to see Colorado move to the Big 12 and then play from there. So I'm excited.
They're moving to the Big 12. I don't know. I mean, you know this. So full disclosure, Ben and I do some friendly bets, and I have to take him to a sushi dinner now because I bet that Colorado would have no more than 4 losses this year. Which I didn't look at their schedule. I was like, because they beat TCU. We look, and he's like, they're going to crumble. And so, anyways, I think they lost their last 5 games.
So something like that.
We got to plan that.
To keep track. Yeah,
we got to plan that.
There were a lot of losses, so it's hard to keep track of all of them. But
yeah, well, if you don't want the free dinner, Ben, that's fine. I mean, I may be talking about Ohio State the whole time, so maybe you're avoiding me. I don't know.
But anyway, this goes back to our point. They have 2 of the highest 8 players in NIL money, and they went 4 and 8. It's still about developing a culture in a team.
Yeah,
great players.
They're doing a good job.
Shedeur and Travis are incredible players, but
yeah.
You can't just college football's not a sport where you buy 2 players and you say, hey,
yeah, you need a whole team.
And
in fact, that could hurt because if you have one amazing player, no one to surround himself with, then totally. That could hurt too. So, all right, let's talk about the implications of this. So, let's start with the crazy example. So you're in $2 million. You're going to owe several. So let's say it's at Pennsylvania. You're at Penn State or Pitt or whatever, and I don't think there's an example of someone in Pennsylvania, but let's just say you're in Pennsylvania because we did the analysis already. You get a $2 million NIL deal in. Did you use 2024 tax brackets here?
This is 2023, so this
So
would be this
2023.
current year. Yeah.
Okay, it's all very similar though. So you have it broken down in details. $2 million, assuming you don't do any financial planning like 401ks, deductions, etc. The total is 45%. So I already figured this out. I readjusted the formulas here. You're going to pay state taxes of 3.07%, local taxes. Let's say if you're at Pitt living in Oakland, 3%. You're going to pay Medicare taxes double because you're your own business, so you're on the employer and the employee side. So that's 2.9%. Social Security tax, you're going to pay 6.2 times 2, the employee and the employee side up to the Social Security wage base. So that's almost 20 grand. And then the big one's federal taxes because you're going to pay 10, 12, 37. So anyways, the total taxes you would pay will be almost $900,000 right off the bat. So if you get a $2 million check, $900,000's got to get set aside. It's going to go to 3 ways. It's going to go to state, it's going to go to local, and it's going to go to federal. And federal, part of your federal, the Social Security and Medicare get totaled into that federal. And you should make quarterly estimates because if you don't make quarterly estimates, you're going to pay interest on that $900,000. You're going to end up owing another 50 or 60 grand interest if you just ignore this throughout the year as well.
So Matt, that's a really important point. I just want to clarify. So if you were this $2 million NIL athlete, which you are not, just want to clarify that for the viewers. But
yeah, I had a hip injury, so I'm just kidding.
If you were, and you just got that $2 million check, you're immediately putting $900,000 to the side, and then every quarter you're paying that quarterly estimate,
$225 state, local, and federal. Most of that's federal
to the IRS. So January every quarter to satisfy that payment.
Yeah, which I'm really upset about because as a college student, if I was Shedeur, I'd want to say I could spend $100 a month, and I'd be just short of that. So I 1.1 million, that's like 92,000 or whatever it is a month. I'd be really upset. So I've tried to talk to you, Ben, and save some taxes so I could have that bragging rights of spending $100,000 a month. So tell me, what could I do to lower my? So if we did everything that you put in here, we could get that effective rate down to 41%. So we could essentially save 80 grand in taxes if we set up this 401k and cash balance plan. So what could I put into those?
Yeah, so for 2024, you can put in $69,000 into a solo 401k.
So if I'm under 50, what if I'm over 50 going back and playing?
Well, we got other questions. But and that's important because this is all through 1099 income. So if you this is not necessarily relevant for NIL athletes, but if you have earned income that's W-2, that can be completely separate from this 1099 NIL income. So you can create your own 401k with just your NIL income. You can fund $69,000 into that on an annual basis. And if that's a pre-tax contribution, that is $69,000 that you're essentially writing off of your earned income. Another thing you can do is you can set up what's called a cash balance pension plan. All contributions to a pension plan in this cash balance variety are pre-tax as well. It's actuarially determined, and
it's based upon your age.
It's based upon your age. So
you probably couldn't put. We have 100 in here. You couldn't put 100 if you're 20 years old, but you could. You could put in a similar to a 401k amount.
Correct.
And that it has to have like a permanent, like a 5-year. It should be in place for 5 years. So if you do that and then you go pro like in a year later, there'll be some IRS eyes on that. So we have to be careful about that as well. Mm-hmm. But in general, there's many ways. And then it's unknown whether you can set up like an S Corp. You could save a ton of taxes and to pay yourself a salary and avoid Social Security, Medicare taxes on the distributions versus your salary. But we've read a lot on this in preparation for this podcast, and some places say you can do it some place. So ultimately it's up to NCAA guidelines, which are still evolving over time.
I was gonna say, this is still living and breathing. This rule was rolled out in 2021 and it was kind of the Wild West. It was players getting checks here, players getting funds from this company. And they're really trying to regulate this. And so I think over the next couple of years, we're going to see a little bit more regulation in this space. So it's not essentially free agency, which is how it's acting right now.
And then real quick, I have to point out, it's not that. So if you did the analysis here on 100,000 and it's still 32.6% when you add state, local, Medicare, Social Security, and federal taxes altogether. If you make 100 grand, 32,652 has to go to, assuming you do the standard deduction, don't itemize. So a third of your money still has to go to taxes. So if you're Shedeur or Bronny, we didn't do the $6 million one, but the $2 million one, he made $4 million. So if you're a $2 million NIL deal, 45% is going away, 900,000 of the 2 million. And even if you're a $100,000 NIL, which is more common.
Sure.
30,
we're using drastic. I mean, we're saying the top 10 athletes of the entire country. I would say this mid six figure. I mean, that would be a very strong
common
NIL deal.
Yeah. And still you almost 33 grand in the state of Pennsylvania would have to go out of your 100 would have to go to taxes. So you have to be very careful because, with a lot of these athletes, they have, and this isn't a book by Morgan Housel called Same as Ever, but like these athletes have like this invisible debt. It's called social debt because like a lot of these athletes came from rough, backgrounds financially. And so their parents and their first, second, third, nephew, like they want to spread the wealth and they almost feel this like invisible pressure to spread the wealth. So make sure you know how much money you actually have. And then you have to be careful because you have to take care of yourself too. So I'd recommend, generally if you have an NIL deal, like save a normal NIL deal, at least like a third, like spend a third, save a third, pay taxes on a third. And the bigger you get, like if you're getting a $2 or $3 million, you're most likely like a professional prospect, or you have like a parent you're going to be a professional just because of like your parent, like Bronny, I think is definitely like NBA caliber, but still because merely for his dad, like someone's going to draft him just so his dad will play with him in the last couple of years. You should spend a large amount of this insurance. You should buy a part of this money, buy insurance for yourself if you get injured during college, etc. Through like a Lloyd's of London type outfit to make sure you're protecting your millions of future income. So there's a lot of responsibilities that come with money. And one of my favorite quotes is money doesn't change you, but it really magnifies who you are. And if you don't have the financial literacy training, the right influences in your life, or let alone the wrong influence in your life, this could go quickly. And you could not only, NIL deals could make you go into drastic tax debt if it's not managed properly.
Right.
And then everyone's going to be hitting you up for new business ideas and everything like that. So is this public information when people get NIL deals?
The list of highest NIL deals was public information. I don't believe every NIL deal is easily researched like that.
Okay, that's scary because if I had a kid that got an NIL deal, I would say keep this private.
Yeah,
let's keep it private as possible. But Ben, thanks so much for the research and breakdown of this. Super important, and hopefully this is helpful for the audience. And if anything, we recommend if you know of someone, make sure they consult with a good financial advisor, good tax, CPA preparer, and make sure as the rules evolve, there's lots of strategies such as setting up a LLC, S corporation, that you can do a lot of, potentially hundreds of thousands of dollars of tax savings as rules become more clearly laid out in the future.
I would say low-hanging fruit for anyone that is earning NIL in these ballpark ranges. I would say number one, track every single expense that you have, because again, this is self-employment income. So any expenses that you incur related to your NIL can be written off of your income. So if you are driving to an appearance fee, you can deduct mileage. If you have a business phone, if you have meals, any expense that you incur related to your NIL can help reduce your income, which therefore reduces your tax liability. I would have a totally separate, like you said, NIL bank account and NIL credit card. Any purchases that you make related to your NIL can be done on that card, and then from a tracking standpoint, it's super easy to just pull one statement and then write out everything that you have month to month for an annual check. And then I'd create a monthly budget while paying myself first. So again, fund that solo 401k, fund that backdoor Roth IRA that we were talking about, and then obviously spend some. We're not saving every single dollar we make, but pay yourself first so that you have an allowance, so to speak, that you can comfortably spend, knowing that you have taxes taken care of, knowing that you have your expenses tracked, and knowing that you've put some away for the future.
Yeah, take the stress off and say, hire a financial advisor that can say no. You can blame to us. And your friends, family, everybody says no. I've given up the decision making as a college athlete to focus on my career as an athlete, or in college, and so it's an easy no. Like, hey, all those decision making I've outsourced, and then that way you have the out when you get hundreds of asks. So, well, Ben, thanks so much for preparing this, and look forward to catching everyone next week on FIN LYT by EWA. Thanks for tuning in to our podcast. Hopefully you found this helpful. Really hope this is as beneficial and impactful to as many people across the nation as possible. So hit the follow button. Make sure to rate the podcast, and please share with any friends or family members that would also find this beneficial. Thank you very much.